In the trenches with the art of trading IPOs. Scott, we have two that we can talk about here. YNDX rallied 55% the first day of trading. LinkedIn was over 100% on the first day of trading. I need to get your game plan on how you deal with these and how you deal with these after the IPO.
Thank goodness for these two IPOs. Otherwise, my traders would be pulling their hair out more than they have in the last month, because the action on these first days have been awesome. I talked about LinkedIn. I showed you how once a stock creates an opening range, pulls in, and then trades above it, how you can get long. And you saw it go above 89.92 and went to 120. And this stock is actually holding up well also. We'll talk about investing in that probably in a few weeks from now. But I want to show you yesterday's trade in YNDX, because it was very important. And if you're a market participant trading for cash flow, you had to trade with this strategy. So let me dissect it for you. If you look here when it opened up, okay, it had a quick move. Okay, just say to, actually this is wrong, so I just say 38, came in, put in a pivot bottom here at 30.50. This was probably the first entry that I did amongst my traders, buying it around 33.50 versus that low. Had a quick move up, wedged, could not break above, consolidated all day long. Nice tight pattern, absorbing all that deal flow, all those flippers, everyone involved in the deal. For those of us who are not, like myself, I have to trade for cash flow. So once it went above this opening range where you look here at 36.29, here's your entry, 36.29, and then you got yourself a nice move all the way to 40.
So did you sell for the end of the day then?
I sold for the end of the day, but I also held some. You can see by the virtual floor I do have some because it did close well, and I think it might get a little follow through. So right there you had two entries. You had a buy versus the low, and then when it traded above that opening range and held and continued. So everyone that participated made money. The guys from the deal, the guys from everyone who wanted to flip, and then even traders who know how the art of trading the first day could be so profitable.
But here's my question, because not all IPOs are created equal. So how do you know when you can play this kind of strategy for an IPO, and how do you know when you need to just stay clear, like a Ren, for example?
Well, that's a great example, because Ren, I think, opened up around 16, went to 20, and then traded below the opening price. Once that trades below the opening price and goes below it, it's off the radar. That means it's not a hot issue. That means it's not demand. And it means all the hype is just hoopla and not hype, and it's not worth your attention. So once, like just say if the index couldn't go above 36 and it started to dribble back down to 33, the trade was off. The attention wasn't there, the demand wasn't there, so it's not something that could work out. So that's part of the art, knowing when it could follow through and knowing when it's just not enough power.
Real quick, do the shorts change the game for LinkedIn now that investors can short the stock?
I think it makes it more interesting. I think yesterday was an awesome rope-a-dope. It was the first day they were allowed to actually short the stock. They kept LinkedIn like weak all day long, so everyone thinking, oh my goodness, it's overpriced, it's going to go lower, it's going to go lower. So for the first few hours it was weak, and then they squeezed it up $4 or $5. So I welcome the shorts. That'll make the action that much more snappy.
And then for the long-term investor, you mentioned that you have to wait for a while, so that leads me to SodaStream. You know, I IPO'd in November of 2010. But I have to question if that kind of rally, because, you know, it's up 190% since it IPO'd. Does that really make a good long-term investment? And we were talking yesterday that we were watching CNBC, and Herb Greenberg and Jim Cramer did a segment on SodaStream, and it was a taste test, and the stock popped like $2.
Well, that's what happens when you have a small float and you have a heavily shorted situation because of the supply and demand. Soda has been an awesome vehicle for traders and investors, because what I talk about with investors are wait 4 to 6 weeks for a new issue to trade, develop a range to give you a pivot point to get in. And if you look at Soda, after it traded for a nice amount of time, it gave you that pivot point. Okay, let me just show you real quickly here. This first pivot point was right here, around 32. Okay, it did give you a small trade, but this was, you know, too quick. It was only out for about a month. So after being out for 2 months, this was your next pivot. So once it traded above 33, this was your buy. And if you bought it there, Soda right now is at 55. So it's about, what, 25 points higher, so almost 100%. So if you waited 2 months, you still could have made 100% with a lot less risk and more calculated entries. So for an investor, you know, if you try and get in too quick, sometimes you have to wait. And I do think 2 months to 3 months is the time frame.
Yeah. And real quick, I want to wrap up the segment with AIG. Re-IPO. You touched on this thing?
I'm going to watch it. Once it finally gets placed, this thing's been so battered and bruised, and maybe finally, once it's in the hands, you know, it could see a bounce. But, you know, only if I see huge volume and only if I see, you know, the volume rate intensify huge, I'm probably going to avoid it because, you know, no one's been making